All right, today I'm gonna show you the top things that I do to do market research to determine where I'm gonna buy these properties. Where you buy, well, is gonna be something that you marry for a number of years. You wanna make sure that you buy in the right places. So today I'm gonna walk you through that framework on how we do that. Let's go. All right, are you new to the real estate market or trying to identify where you're going to invest in properties? If so, that can be a daunting task to determine where out of all the 200 markets across the US that you're gonna marry over the next 5, 7, 10 years. Today I'm gonna show you how to date them, how to marry them, how to buy. We'll put a ring on that. Let's go. Okay, there are 3 factors that you need to consider when determining supply demand. Write these things down. If you're not already writing these things down, once again, I don't know what you're doing. Make sure you write these things down. 3 things you need to consider. Number 1 is 5-year rental vacancy rates. So the vacancy rates, 5-year vacancy rates. What's been going on? Trending up or down? Number 2 is the 5-year median rents. Have rents been trending up or down or stagnant? And then number 3 is year-over-year change in building permits. Have there been more building permits for commercial properties, which are 5+ units that have been pulled? Now, here's the ideal situation. An ideal situation is a market that has low or decreasing vacancy rates, meaning that demand is high, and then you have an increasing median rent. So it's a beautiful position. That is an ideal situation. A red flag, a huge red flag, is a market where you have an increased number of permits, meaning more builds that are about to happen, but vacancy rate and rental rates have been dipping. That's a sure sign that there is more supply than demand. That's a red flag that you should look for. And all of these things, by the way, can be found on the census.gov website. Just as a refresher, we did step 1, choose 7 to 10 markets to do research in. Step 2, you need to identify the 6 economic factors that you're gonna actually research on. That's what I just walked you through. Now step 3 is you're gonna rank the top 10 markets. You're gonna take those markets we've done the research on, and you're gonna rank them according to what we have just researched with those 6 economic factors. They're not all even though. So I'm gonna tell you the ones that carry the most amount of weight. Number 1 is job growth. That carries the most amount of weight when we're ranking these markets. Number 2 is household formation. Number 3 is job diversity. Those are the 3 that carry the most amount of weight. If I were to throw a 4 in, is that landlord tenant friendly state. We wanna make sure once again that we're buying or we can actually control what we own. All right, step 4, now that you have ranked these top 10 markets, you're gonna choose the top 2. 1 to 2, period. But you're gonna choose the top 2 and you're going to grow roots in that market. When I say grow roots, I mean build your teams and actually commit to the market. This is when you're putting the ring on the market. You're marrying the market. Understand you've done the dating by doing your research. Now you're marrying it by actually building teams and committing to that market. The number 1 mistake that new investors make is going into a market, trying to get this good deal. They don't get it after a month or whatever, they bounce to another market. Commit. There's no perfect market, and how you find the best deals is having a team in the market and actually committing to the market. If you've done the research that I just showed you to, and you've been able to rank these markets with the metrics that I showed you to rank them on, you can fully, confidently commit to the market, and I promise you, if you do that, you will find deals there. Now, step 5, once you've done that, create a market summary report. Listen, create a market summary report. This is critical for you to understand the market that you're in, why you're in it, but it's critical for you to relay that to investors. See, when you're talking to investors, you're not just talking about this return, that return that they're getting. You're talking about why you're invested in that market. You need to know why you're doing that. And listen, that research you just done will give you massive amounts of confidence, be able to tell them exactly why you're investing in that market and why they should too. And I'll give you an example of this. When we started to invest in Columbia, South Carolina, people were like, why? Why Columbia, South Carolina? And we were like, this is why. We show them a market summary report that talks about what's happening in the state, at a state level, what's happening at a local level, and why we feel like Columbia is primed to grow. And guess what? It was primed to grow. Did the same thing in Charlotte. We're doing the same thing in Middle Georgia right now. We started to invest in Warner Robins. People are like, where's Warner Robins? I asked the same thing when my team brought it to me. We know what to look for and what trends to look for so that we can confidently pull the trigger, even in areas where people are like, you're crazy. You're not crazy, you're first. To quote my good friend Jamie Kern-Lima, you're not crazy, you're just first. All right, number 6 is landlord versus tenant-friendly states. Trust me, this is an important thing to consider. We need to be able to understand, are we in control of our business? People get so funny about this. You have to be able to control what's in your business. For example, if you're gonna start a sandwich shop, you had 2 options of where you could start that sandwich shop. 1 is an area where they told you could only sell 200 sandwiches in a day, that's max. The other place you could sell as many sandwiches as you could possibly sell. Where would you start your sandwich shop? Here, no question. The place that actually gives you autonomy and control to run your business and scale your business. It's no different with where we buy properties. A couple things that we need to look for. We need to understand how easy it is to evict a tenant if they violate their lease. We need to understand the grace period that a tenant has to pay their rent. We need to understand how do we have full autonomy to be able to raise, decrease rents the way that we want to. We need to understand the security deposit return process. We need to understand security deposit limits they have. And we also need to do some research on which party is typically favored in court proceedings. Once again, all of these things will give us a good pulse on, is this a landlord or tenant friendly state? Here is maybe the quickest, easiest way to look at that. Is it a blue state or a red state? As a general understanding, red states, more owner friendly. Blue states, well, we run from those sons of bitches. As a bonus, because I'm feeling generous, look at upcoming construction starts. And I'm not talking about construction starts with multifamily. I already told you to look at that in step 5. What I'm talking about is other things that are being built. Retail centers, shopping centers, offices, because all of these things bring people into a market as well as jobs. And some of those are temporary jobs, but some of those jobs take 3 to 5 years to complete. A big construction, 3 to 5 years. Well, our average hold time is 3 to 5 years. So those things are another little indicator of where we're at now. And you know what to look for is you subscribe to Tyler Deverell's YouTube channel. You smart, intelligent son of a. Now, if you don't subscribe, make sure you subscribe. Make sure you share this episode with others. And make sure you continue to tune in for more golden nuggets that I pop out of here. Sometimes out of my ass, but most of the time out of here, okay? Hey, live always with aloha. Peace.